So I want to get with John today and talk about interest rates, because right now we're seeing a dip in interest rates due to, I guess, the turmoil in the financial markets and the coronavirus thing. So I'll let you touch on that.
Yeah.
But really wanted to show you guys how interest rates affect your monthly payment. So we're going to use an example of $200,000 purchase price and showing how different interest rates affect your monthly payment. So John, if you want to take it away.
Yeah, we just use 20% down. Of course, you can use 3% down on a conventional loan, 3.5% down on a FHA loan, or a VA loan is nothing down. So just we did this for a comparison. So, you know, at 3% interest rate, which is where the rates are headed today, your payment would be $674.57 with an APR of 4.3. You go up half a point, and there's $45 difference between these two, and a $90 difference between 4% and 3%. So you can see as the rate increases, your rates go up. This is a perfect time to buy. If you're not out there looking for homes now, you should be. These are the lowest rates I've seen. I've been in the business for 20 years. So call Jeff, because he's the guy to help you find a house.
This is for comparing apples to apples, but P&I stands for principal and interest. Normally you'll factor in tax and insurance, which can vary, at least taxes can vary from house to house. But at any time you're curious about the monthly payment on a home, you can get with John. He can go over the numbers with you on knowing what your monthly payment is for a particular house that you're looking at. What's the difference between APR when they see that versus the interest rate?
You have all the closing costs, and that includes your first year's insurance, all that kind of stuff in there. And then they add it back in, and that's come up with the APR. That's not what you're paying. The real interest rate is 3%. So, you know, that's how they figure the APR. And it's a formula about this long to figure an APR.
So interest rates right now, you said we've seen a little bit of a dip. What kind of range? Everyone's interest rate can be different depending on their credit score and how much they're putting down. But in general, what kind of rates are we seeing right now? Why should someone be taking advantage of the rates today?
If you don't jump out there now, this is a once-in-a-lifetime deal as far as I'm concerned. I've never seen this long. When I came into this business 20 years ago, they were 12%. You know, they got as high as 18 under Jimmy Carter. You know, we don't know what the future holds. There's no control over this. The coronavirus really has dropped rates. You know, plus, you know, the market's kind of off from China because of coronavirus. I mean, lots of factors that go into this. So I'm suggesting that everybody go out and buy a house if you got the money. All you need is 3% down or 3.5% down. You know, go for it.
Well, thanks, John. As always, feel free to reach out to us if you have any specific questions or you want to get started on that home search. All right, guys.
Thanks. Bye.